on YouTube. So go to youtube.com and search Bloomberg Radio. Well, a lot of folks, I think, probably came up in the business kind of thinking about that 60-40 portfolios being kind of ideal, stocks and bonds. But a lot of folks, been over the last decade plus have been saying, hey, you can juice returns if you go with alternatives, put that into your mix somewhere, maybe 10% or something like that. But one of the risks of alternatives is the lower liquidity and sometimes, illiquidity. Our next guest tries to address that issue. Brian King, he's the CEO of Lotus Markets. He joins us here in our Bloomberg Interactive Broker studio. Brian, welcome. Talk to us about Lotus Markets. What do you guys do there? What are you trying? What market demand are you trying to meet?
Yeah, thank you so much for having me. We are essentially a stock exchange for alternative investments. We're actually registered as an ATS, which functions a lot like a stock exchange. But to the point that you just made, most alternative investments are largely illiquid. And we're seeing this massive shift of where most alternative investments have historically been invested in by major institutions, and the pendulum is moving more to individual investors. And the closer you get to a true retail investor, the more important liquidity becomes. And so that's really what we're doing, is we're allowing the opportunity to match buyers and sellers of these illiquid assets.
All right, so how was it done before? Like, could I just not get liquidity in the past, or how does this work? Give me an example, maybe a trade or the types of trades you guys facilitate.
Yeah, so we started our market in the registered fund business. So they're registered, filing Ks and Qs, but they aren't listed on an exchange. In many cases, these funds were completely illiquid, so you couldn't have a liquidity event until the fund decided that there was one. In some cases, maybe you could pledge your shares into a redemption queue, and then they would buy back your shares. But for the most part, though, if you had like an urgent need for liquidity, you would call up a broker. The broker would try to find the other side of the trade. They'd give you a dramatically deep discount of 50, 60%, and you would pay a 10% commission to do that.
So you get ripped off.
Yes, your face is literally ripped off.
And and that's part of what drove you to create this, right? Because
exactly.
What happened? Did you get ripped off before, or you didn't want to get ripped off when you needed liquidity, or what happened?
Yeah, so I do have some very specific experiences in my past, not me directly, but family members and others that were kind of locked up into alternative investments. And so for them, situations, specifically during the financial crisis, they were looking to get out. They wanted to be able to get in front of it, and ultimately some of these funds went completely belly up. And so you live with those moments, and you see that type of a situation occur, and you want to be able to say there's got to be a solution for it.
Okay, so if you facilitate a trade on your exchange, how do you get paid? What's kind of your business model?
So we right now, the sponsor doesn't get charged anything, the buyer doesn't get charged anything, but we do charge the seller a 3% commission. So it's not nothing, but these are illiquid. So that's the charge that we typically take. It's 2.9%.
And how do you find the buyer? How do you find the other side? You have relationships with people that buy and sell these types of investments?
Yeah, there's a lot of natural buyers of alternative investments. You can think of a lot of institutions like insurance companies, hedge funds,
what's a
private
transaction
equity.
size for you?
So it can range. So it can be all the way. We're an ATS. It's actually approved.
What's an ATS?
Sorry, ATS is an alternative trading system.
Okay.
So if you think, my background, I was part of BATS as a startup company. BATS was an ATS before it became an exchange. It functions a lot like a stock exchange, but isn't regulated in the same way. It's a little bit different.
And this is how you have a lot of experience at BATS, at NYSE, and
that's right.
This is how you not only know how to find buyers and sellers, but how to put the infrastructure together, because that, I have to guess, is also an important part of it.
That's exactly right. So we're a technology company at our core. So you build the technology, you build the framework. We're highly regulated both by FINRA and the SEC. And so there is a lot that goes into it. But yeah, my background comes in helping to match buyers and sellers and finding those institutions. And then we also have a lot of RIAs and family offices that say, hey, we've already invested some of our clients' money in this. And so we would be, in many cases, wanting to buy more of it. And if you could buy it at a discount, that's even better.
So, I've read you're the third biggest ATS in the country, and you've got some big players on your platform. Let's just look into the list: Blackstone, Starwood, Deutsche Bank funds. How big is the platform if you put all those assets together?
Yeah, so I think if you added up all the assets that are on the platform, it'd be around 200 billion that we're trading today. But we made an announcement a week ago. So again, I talked about the registered funds is where we started, but we just launched our first private real estate fund group. Walton Global is now listed on our marketplace. We had 4 different large transactions in that, but that was our first foray into private real estate. Private real estate is a $14 trillion marketplace, so it's a wide addressable market.
But what do you mean by private real estate? It's not like the Sweeney Ranch on the Jersey Shore. I mean, what are you talking about?
Yeah, so a lot of times you have sponsors that put together private real estate deals. They raise capital from large investors. Typically, you have to be accredited to invest in those types of investments, and so they put those deals together. And typically, you have to wait for the sponsor to have a liquidity event before you yourself can find one. So we're now starting to work with sponsors to help them find liquidity for their shareholders.
Because,
that want it early.
all right, if I were a shareholder in one of those things, and I'm looking around Manhattan, I need to get out of this thing because I think when XYZ building on 3rd Avenue trades, it's going to trade at 50 cents on the dollar. So you're getting into a marketplace that is going to have incredible volatility, I would say, over the next 5 to 10 years. Is that how you view it? I mean,
yeah, I do agree that there are some segments of commercial real estate that are going to be very volatile. And there definitely, if you're looking at New York, you're looking at San Francisco, those places when you're looking at commercial real estate, office buildings, they're really in a tough spot. I think the biggest thing that they have right now is the financing, right? The sponsors themselves trying to find the ability to refinance those deals is going to be really challenging.
But not a lot of volatility if you're looking in like the Columbus, Ohio metropolitan area.
Of course.
Looking at student housing.
Yep.
Looking at medical offices.
Yep.
Looking at movie theaters.
Multifamily.
They're going to be okay.
Yeah, multifamily
Gonna be
is
okay.
having like some real success though too as well.
yeah, exactly. All right, who do you compete against?
There aren't many direct competitors. NASDAQ has a private funds division that they're successful, but we don't compete head to head right now. The things that they do, we don't, and most of the things that we do, they don't. It's just now people starting to move into this space. So it's a great opportunity, right, to be kind of the first to do it.
Now, do you put up capital to facilitate these trades, or are you just simply a broker?
We're agents. We're agency, yeah. So
Okay.
we're not buyers or sellers of the asset. We're matching.
And again,
buyers
an
and
average
sellers.
transaction size for you on average?
Let's say $100,000 to $500,000.
Okay.
Is probably the average, and the more private it gets, the larger the size of the transaction.
And how many trades do you do a day or something like that?
It varies because it's an illiquid market. It varies. You could have a couple a day, or you could have 20 a day. But it's
How long does it take you to kind of execute a trade? I mean, it's not like me back at Payne Weber pushing my button for Alliance and I'm dumping my 400,000 shares of XYZ stock into Alliance.
Yeah, so it's actually we've set our marketplace up in a very traditional way.
All right, thanks so much for joining us. Right now, we're just going to go to Washington, D.C. Elon Musk is now speaking outside of the Senate building.